Hello and welcome to Charting the Markets. It's Monday, the 5th of March, and we're seeing by and large European markets really struggling for direction. UK FTSE 100 underperforming the likes of mainland indices, which are generally slightly higher. That comes as we start the week off the back of a weekend that did see a focus on China. We saw them coming out with their growth target, and by and large, that did disappoint. People think that if they enacted a very high growth target, then we would see them really push forward with a number of stimulus measures. That didn't necessarily happen. And instead, with that 5% target, we have seen a number of the mining stocks underperforming here in the UK, dragging that FTSE 100 towards the downside. Despite the fact that by and large we have got a relatively quiet start in terms of the economic calendar, we have seen a number of interesting things coming out this morning. We've seen a sharp increase in terms of new car sales here in the UK. That, of course, is a vote of confidence in terms of consumers and the willingness to make significant purchases in the face of what some would believe would be a year of struggles for many within this UK economy, the potential for a recession, the potential question marks around about the jobs market as a result, the rise in prices. Seemingly people don't really mind too much and they feel confident enough to be able to do something like purchase a new car. Elsewhere, we have seen construction coming into focus. Eurozone construction PMI moving towards the upside, but remains in contraction. But the UK figure was the big number here. We saw for the UK construction PMI 54.6. That's up from 48.4. So massive jump in terms of that construction PMI reading. I'm just going to go into it just quickly here and see. What we saw was a renewed expansion of total output, with greater commercial work offsetting the drop in housing activity. Interestingly, input cost inflation lowest since November 2020. So lots of positivity around there, but unfortunately, looks like the mining sector is somewhat dragging things as it stands for the FTSE 100. In terms of what else to look out for, there's not a whole lot for the rest of the day. The IV PMI out of Canada, the factory orders coming out of the US, and overnight we've got average cash earnings from Japan. But this is a relatively interesting week. We've got the Australian interest rate decision, we've got the Canadian interest rate decision, and we've got a third one with Japan on Friday with their rate decision, all leading into Friday's non-farm payrolls release and Canadian jobs report as well. So relatively busy week ahead. So let's get stuck into the charts and see exactly how things are playing out. On the indices side of things, we can see that the FTSE 100 started to roll over somewhat. We've been within a period of somewhat consolidation. You can see the declines taking place over the course of the sort of middle to back end of February really led into this period of consolidation, crucially breaking up through this area of resistance around about 79.50, right? So the question mark here is, are we out of the woods? Is that the sell-off done? And now we're just going to continue on the bullish trajectory that has been playing out throughout much of Q4 leading into this new year? Well, not necessarily. What we can see here is that the collapse that we saw here around about the sort of 20th to 23rd of February did see a move out from this trend as highlighted with this ascending trend line and a move through your swing low support. So your first one was here, which 79.54, and then, you know, a number on the way down here. So we've essentially moved out of this intraday move and we've moved into the wider trajectory. So if we draw the Fibonacci on this wider sell-off, what have we come into so far? So we have come into the 50%. We haven't come into a deeper move. So there is still a good chance we do see further downside coming into play to come into that deep decline. Now, greater confidence with that comes on a breakthrough. Excuse me, that just ticked up there, 78.74. And so another way of looking at this is, okay, we've been seeing this decline out of this near-term intraday uptrend. Now we've seen this consolidation phase. We've broken up through resistance, but are we then retracing this wider move before we come back? So let's just get the fib onto this decline here and see exactly where we've come into. Let's just try and make it as exact as possible by pushing it forward. And absolutely perfectly, this isn't one that I've made earlier, but a lot of the time it does look that way. You can see here perfectly tagging that 61.8 on 1, 2, 3, 4 times, the first 3 of which literally tapping it and moving away time and time again. So this 61.8 Fibonacci level is being respected very well. That to me points towards a high likeliness that this decline we're seeing at the moment is likely to take us through 78.74, excuse me, and move us back towards this deeper retracement zone. There's a good chance we're going to move beyond that, but certainly as things stand, you can see that this wider uptrend does still remain in place. So, we haven't broken up through the likes of, say, 77.07, which are give us greater confidence of such a move. As things stand, we've seen a pullback. We've rebounded. I see that as a retracement for a third leg in that you could say is almost like a ABC style retracement here. So something like that. And then the questions are asked, is this just an ABC style retracement, or is this something that is going to be a topping pattern? Like I said, a move through 77.07 gives us greater confidence of that. So near term, I think there's a good chance that we do develop on the downside we're seeing on this current move and see this market push down through 78.74 to move into this deep fib zone between 77.87 and 78.36. In terms of Germany, outperformance we're seeing here with the rally up into a key resistance level, 156.56. That was the peak that we established back on the 9th of February. We've tagged it. Now we're starting to see some indecision coming into play following a very strong end to last week. So on the daily time frame, let's see exactly how this is playing out. Well, look, we've got a big bearish trend. We've seen a recovery phase, more recently moving into this stepped move where we saw this period of consolidation up into that next phase. You can see that top end of this phase comes at the exact level that we're looking at the moment. So I'm just going to push this back. Oh, excuse me. Push that forward there. So as we can see here, we've got this current phase here, which is the ongoing consolidation. So we haven't broken out of it yet. We've rallied right up into the top end of it, and by and large, most of the price action has been taking place over the course of the past month has been taking place within this sort of lower end. We rarely get into this 156.56, but that's what we have done. And we've pretty much come into it on Friday. We've now tapped it and we're starting to weaken here. So from a risk to reward perspective, I would say that this looks a lot more attractive from a short side than it is for looking for longs right now. Certainly with what's happened in terms of the growth expectations or forecasts in China or Target, that's not necessarily great for German markets. And I think that there's a good chance that we do see this market start to weaken from here. A move through 156.56 negates that and points towards a breakout from this phase and the next leg higher coming into play. But because of the fact that we're so close to it, I think it makes sense to be looking for this market to roll over somewhat. Even if it's just going to continue in this consolidation phase, we're still looking at a market that is very interesting from a short perspective. Let's look at the nearer term price action. I'm going to look at the 15-minute chart, and we can see that we're seeing this same sort of almost sort of box of consolidation taking shape on the short term as well. So certainly a move through 155.88 will give me greater confidence that we have topped out at this key resistance level and that we're going to see the bears coming back into play once again for the DAX. In terms of US markets, the NASDAQ, we can see Friday, once again, a strong move towards the upside. Does that mark the beginning of a more bullish phase? Well, look, from this wider perspective, I would say that it looks like there's a good chance that we've seen this market top out because we've come into this 76.4 fib. As we can see here, I'm just going to get rid of the 61.8. And we've seen this little double top formation. We've dropped down into the next key swing low. That is essentially the key swing low. We've created that double top, which pointed towards a high likeliness that we weren't necessarily just going to come into the 76.4. It was likely that we were going to come into the swing low. And then the question mark is, do we break that or do we not? And certainly as things stand, we've just tagged it and moved sharply away from that level. So that would point towards the possibility that we're just going to continue on this vein. We've pulled back and now we're going to rebound from here. But bear in mind, we're not creating higher lows anymore. We're creating flatlining lows. That signals the possibility that this rebound is going to falter and start to roll over once again. Fib wise, I don't think we're really going to be in anywhere too notable at the moment. You can see up ahead, let's just see in terms of which one to draw it's from. It's more difficult for this one, but you can see, there's still upside movement that can give us a move into that 61.8. This is the 4-hour chart, and we can see here, like I was saying, that intraday trend certainly bearish with the break up through resistance that we saw here, 121.63. That points towards the bulls coming back into play somewhat. How long that lasts, I don't know. And certainly, with the strong PMI numbers that we saw coming out of China, it started to build this picture of economic strength. Then suddenly you see a sort of underwhelming growth target, takes a little bit of the heat out of things somewhat. And certainly inflation, I think, is going to remain a key concern, with the possibility of a resurgence in inflation. And certainly we're talking later on in the show in terms of energy markets, but we have seen signals that we could possibly start to bottom out in terms of nat gas, in terms of crude. And that, of course, is bad news in terms of inflation, in terms of the expectations of being able to quell this rampant rise in terms of interest rates. And that, of course, would have negative implications for stock markets as a whole, but in particular, the likes of the NASDAQ, which has a lot of companies within it with very high price to earnings ratios. So if your expectations of earnings are significantly deteriorating from a stock that is a growth stock, so it has high expectations, then you're likely to see this area really coming into focus in terms of the sellers. So near term, we have seen a rebound. I think there's a good chance that we do start to weaken from here, but things certainly look very different from what's happening in Europe. We have seen the US recently underperforming. Now, I think there's a good chance that we do see the US markets potentially faring a little bit better. We've seen this sort of bullish breakout. It looks a bit different from the DAX, but ultimately we might break through resistance on the DAX, and in which case both of them look relatively hunky-dory. But near term, I think given what's happened over in China, we're coming into a new week off the back of that. I think there's a good chance that we do see a pullback, and then we'll have to try and determine whether we think that that's just a retracement because we've bottomed out, or whether we think the bears are going to be back in charge once again for the NASDAQ. Looking at the FX space, the US dollar had a period of resurgence, and then we've seen it largely consolidating a little bit of late. But maybe that's just a precursor to us seeing markets move towards a downside once again, the US dollar coming back into strength, and the likes of euro dollar, cable and alike moving lower. And so certainly let's look at the charts and see exactly how things are playing out. This is the daily time frame in terms of euro dollar. We have seen this protracted period of downside throughout much of February, but like I said, we've seen over the last week this sort of recovery phase, not necessarily sort of reeking of desperation to get out of equity markets to jump into the US dollar. But bear in mind, what we've seen here is this pullback into and towards that 104.83. Certainly we break below that level, it looks like this market's going to really unwind and start to roll over in a meaningful manner. As things stand, yes, we've been seeing this move towards the upside, but 4-hour chart shows us that we have got this move in towards trendline resistance. Whichever way you look at it, you've got this top end coming in towards a sort of trend line. We've got this lower point being drawn. So we've got this zone of potential trendline resistance coming into play here. We're starting to fade as we start the week here. So I think there's a significant risk, but I wouldn't necessarily be looking to short it here, because if you look at it, recent price action, we've got this creation of higher lows, we've got the creation of higher highs, and we're within a move that could ultimately give us that next higher high. However, there's a good signal to tell us that's not going to happen, and that would be a break below 105.76. If we break that level, we've essentially got this sort of sloped head and shoulders formation completed, and it will look for a continuation of this bearish trend and a potential breakdown towards that all-important 104.83 mark. So keep a close eye out for this. We'll be following it over the course of the week, but certainly 105.76 is the key level to look out for this market. I think there's a good chance we do see this start to roll over, but certainly if we break below that level, it's going to be giving me much greater confidence that the bears are back in charge here for euro dollar. In terms of cable, similar kind of picture in some ways. We've seen a pullback. This one we didn't necessarily break through to a new high, so we're looking at a potential double top formation here. The neckline, much like how we've got that big support down below for euro dollar, the neckline here is 118.41. That has yet to be breached. And certainly what's interesting about this is we've got this 200-day SMA that time and time again we keep respecting. So that's something worth noting towards the downside. In terms of the intraday perspective, well, the lower end of this has been relatively consistent, with price action coming into this sort of, it's around about 120, well, it's a 119.30 kind of area down to 119.15. So we keep coming into the same area of support, but the top end, yes, we did see flatlining highs here by and large, but the top end does look more like something that represents a descending triangle here, really. We're seeing pretty much lower highs. There was one flatlining high, and then we're seeing flat lows. So I think there's a good chance that this market does move towards the downside. Certainly the respect we're seeing at the moment on that 100 period SMA, now rolling over from that level, I think there's a good chance that we see further downside playing out for this market. And certainly for me, the big risk here is energy markets. If we see energy markets start to pop, then you're in for trouble, because we're looking at a big revision in terms of expectations for inflation towards the upside, and a lengthening of that period of time that people believe it will take for interest rates to be able to start to come down again. So certainly significant risks ahead, and that is playing out with US dollar strength. It's starting to strengthen here. I think unless we break that 121.47, it's a good chance that we're going to see this market weaken. And I think we're going to break the 119.15 rather than 121.47. For a continuation of bearish trajectory that we have been seeing playing out from the back end of January leading into February. And I think likely March is going to see further downside for this pair. So like I said, happy to be bearish for this market unless we break the 121.47. And then looking at the Australian dollar, we've got the RBA rate decision this week. We did actually see a significant decline in terms of Australian inflation. So is that going to provide the backdrop for the RBA to maybe ease off a little bit? Well, irrespective of that, we're seeing the US dollar coming back into strength anyway. So certainly if we did see some sort of tone like that from the RBA, that would certainly drive this market significantly lower as a response. To the downside, 66.88 is a key support level because it tallies up with that prior low that we had here in around about the 3rd of June. But just above that, key level is 66.95. Now, if we're looking at price action over the course of the past month, February has seen significant declines coming off the back of a rally into this big long-term resistance level of 71.37. We haven't broken out from this wider trend because we still haven't broken either of the 66.29 or 65.85. I think there's a good chance that that is likely to happen, quite frankly. If we look at this weekly, we can see we've rallied back up into this big resistance level and we're within the midst of a period of downside. This also highlights this level of 66.81 here. So like I highlighted it just around here on the sort of 3rd of January and the recent low, we've also got this major low from July 2022. So big support down below. But as you see, price action starting to turn lower once again following a rally that couldn't even overtake this near-term resistance level of 67.83. So, even if we rebounded into an area around here, I still think it's likely that whatever plays out in this zone is going to be a precursor to us rolling over once again. So a breakthrough 66.95, then you've got to look at 66.81. So we've got that zone of support down below. But I think there's a good chance that we do see this pair coming under pressure as we move forward, because I think we're likely to see the US dollar coming into strength. Bear in mind of that RBA rate decision coming overnight. Looking at the commodity space, we've seen consolidation for the likes of the US dollar of late, and that has lent its hand to gold being able to strengthen somewhat. It comes off the back of a period of weakness as we see people thinking, oh, the dollar's going to rebound, therefore we need to sell gold. Well, that's unwound a little bit, but we are seeing some signs that the US dollar is strengthening once again and could be setting up for another move towards the upside. So that does provide some risk for gold. The 4-hour chart here for gold, we can see that we are starting to weaken as we start this new week. More recently, we did break the 1847. So we are creating this sort of higher highs, higher lows. So the pullback we're seeing at the moment looks like a short-term retracement unless we break the 1830. So 1830, I know it's not super close right now, but that's the level that if broken sort of negates the breakout that we've just seen here. Interestingly enough, it's not to say that we've seen a significant sell-off in terms of the US dollar, and gold has actually done relatively well off the back of that. And that's always interesting, when markets fare relatively well against a backdrop of other markets that they're inversely correlated, flatlining rather than declining. So that's certainly notable. To me, it points towards a market that is bullish gold over the wider context, and I think people want to get into it. But there certainly are inherent risks for the time being. So if we break the 1830, it looks like this rebound is over. But until that happens, I think we're going to see further downside here. But we'll track whether the fib levels start to sort of get here and whether we respect them and start to regain any ground or anything. But at the moment, I think this one's at risk, but we still do have this bullish near-term trend that needs to break. So I wouldn't necessarily be trading this one right now. In terms of oil prices, this is an interesting one. Brent crude, let me show you that weekly time frame. This is a very bearish trend over the course of the past, say, 6 months and some. The top end of that, we can see, if we draw a trend line, we can see that we've got this sort of descending trend line on the top end. Probably a little bit better is the one drawn from that nearer point. But certainly that is coming under threat because we're rallying up through, if we just get rid of that one. So these are the 3 points that we can touch. We're rallying up through that trend line. So are we going to reverse from here? Or are we going to break higher? Certainly, if you look at the top end, we're now creating lower highs. If you look at the bottom end, we're creating higher lows. So this is essentially a symmetrical triangle formation. We can see that here. It's just one of the two. Either way, it's the same story, really. So you've got a symmetrical triangle formation. We're breaking up through trendline resistance. Towards the top end, you're going to see this level as key, 86.73. If we break that level, then it looks like the exit of this symmetrical triangle is towards the upside and points towards a more protracted move higher for this market. But until that level breaks, we still do find ourselves within this largely consolidation phase. And that points towards a potential for a decline back towards trendline support. So essentially what we're looking for here is a breakthrough either 80.30 or 86.73. As things stand, the move through that trendline resistance raises the possibility that the upside break is the one that plays out, but that hasn't happened yet. So we still do risk the potential for another pullback to just continue this consolidation phase for Brent crude. That's it for today. If you want any more news and analysis, make sure to go onto the IG platform. Other than that, follow me on Twitter. My name's Josh Money here at IG. Have a great day and good luck trading. Thank you.